Sure. Hello and good evening, everyone. Hope you're all safe and healthy. On behalf of Legacy Services, I welcome you all to Between the Lines and Beyond the Budget, a webinar on the budget presented by the Union Minister for Finance and Corporate Affairs, Srimati Nirmala Sitharaman, in Parliament today. Before we begin, there are certain points that we need to take care of. Everyone is to be on mute except for our speakers. We strongly advise you not to open any links in the chat box. We will be spending the last 15 to 20 minutes in a Q&A session with the panelists. We request you to ask your questions in the Q&A box and not in the chat box. This webinar is being recorded and will be made available to you on the Legacy YouTube channel. The audience is requested to bear in mind that this webinar is for general awareness of the legal implications and developments and does not constitute legal advice or opinion. Please seek a formal legal opinion before taking any decisions. This webinar takes an eagle-eye view and deals with some of the critical issues identified in light of the union budget. And the views which are expressed by the panelists are their individual and personal views and are not necessarily the views or expressions of the organizations represented by the speakers. I now hand over the platform to our CEO, Mr. Jaideep Kevalramani, who is also going to be the moderator of this session. Over to you, JD.
Thank you, Risha. Very good evening and a warm welcome to everyone. First of all, I hope everyone's safe during COVID-19. There is a general positive sentiment, especially after the vaccine has been announced. We have three panelists this evening, each one stalwart in their area. I'm delighted to welcome our first panelist for the evening, Mr. Jayaraj Porendre. Welcome, sir.
Good evening, everyone. Thank you, Jaideep.
Jayaraj is the founder chairman of JMP Advisors Private Limited. It's a leading advisory, tax and regulatory services firm based in Mumbai. And Jayaraj sir himself has over 35 years of experience. He was the regional managing partner, chairman tax, and country leader for markets and industries of PwC India. Prior to that, he was the chairman of ENY India and the country head for tax and business advisory practice of Anderson India. One of the very few who's spent time across 3 out of the big 5. Now, of course, there's the big 4. Sir is also an independent director on boards of 2 listed companies. Under his leadership, JMP Advisors has been recognized as a leading firm in India in the International Tax Review by Euromoney, the World Tax Directory for all successive years since its incorporation, including the World Tax and Transfer Pricing 2021. In the recent review report by Euromoney, they mentioned Jayaraj sir several times amongst the leading tax advisors in this in the country. Welcome, sir. It's a privilege to have you on board.
Pleasure.
Our second panelist for the evening is Suhas Tujapurkar, managing partner of Legacy Partners and the founder director of Legacy Services. So he comes with over 37 years of experience and acts as an independent advisor to various companies, government, trade associations, professional celebrities, non-profit entities, and startups. His thrust area for many years has been in the space of, as we'd like to call it, GRACE, governance, risk, assurance, compliance, and ethics, with a fusion of information technology, application to complex legal problems, and demystifying the laws. Welcome, Suhas.
Thanks a lot.
And our third panelist for the evening.
About your...
Oh, sorry. Is there an audio issue at my end?
Yes, there was an audio issue.
Okay. Sorry about that. So our third panelist who will join us in a few minutes is Dr. Anand Sardeshmukh. He's an NBFC finance professional with over 30 years of experience in corporate finance, project finance, funds procurement, treasury management, lease, hire purchase, and several other areas of corporate finance. He's also a researcher in the MSME space. He's a management council and a member of board of several companies. He was the Director General and member of the board of Maratha Chamber of Commerce, Industry and Agriculture for 11 long years. We welcome him in absentia. Our finance minister started the part B by quoting a famous poet. The quote goes like this: "A king or a ruler is the one who creates and acquires wealth, protects and distributes it for common good." First of all, I applaud the finance minister for bringing out this thought and also for producing a 100% paperless budget. The finance minister acknowledged that these are unparalleled circumstances and we are all in an unprecedented contraction of the economy. Our COVID-19 economic stimulus announced earlier during the first few months of the pandemic and subsequent was clearly pale as compared to what other economies announced. Sure, we do have constraints that we operate under. Given that this is the budget, formal budget after COVID-19, one would have expected a lot of innovation and further stimuli in this budget. At Legasis, we believe in not reiterating what we've already heard, but look at what's between the lines and what is beyond the budget. I'd like to think that we were presented with a great opportunity to enable spending and investments, but did we capitalize fully on that opportunity? So with that, I'd like to throw open the discussion with a question to our panelists. So do you think that this was a missed opportunity, or did the budget come in on all counts good for you? Jairam sir.
Am I audible and visible?
Good evening, Anand sir. Welcome to the webinar.
Am I audible and visible?
Yes, you are.
Some problem with my laptop. I don't know. Not been able to. Some strange things are. I see.
That happens with technology. It always lets you down when you least expect it.
Absolutely.
Yeah, that's what is happening, and I'm not a really techno-savvy guy, so I can't make out what's happening really.
Jaideep, should I provide some initial thoughts?
Yes, sir. Please do that. I'm going to switch devices because apparently my audio is also not coming out well. But okay. Thank you. If you could.
So let me just kick it off by saying that I think this was an unprecedented budget, posing an unprecedented opportunity in unprecedented times. I mean, as they say, we haven't seen anything like what happened in the last year. Most of us living probably have not seen that. The last big pandemic, as we know, was in the Spanish pandemic. But the finance minister, I think, within my own sense, has done a reasonably good job of taking stock of where we are and trying to push the economy with the two goals that she did start with, which was primarily, I would think, to spur demand and to create jobs. I think if you were to take these as two very fundamental objectives, substantial headway, I think, has been made on these two paths. Is it a missed opportunity? The glass is never full. but I would prefer to see the glass, which is even more than half full, in a positive manner. So she started with the point of Atmanirbhar Bharat, which is something I think has been propounded by the Prime Minister, and the whole country is trying to gear up to make sure that we are not seen to be inward looking when we say Atmanirbhar Bharat. So I think that is not the intent and should not be taken as the intent. There has been substantial focus in 6 areas. I won't repeat all of those, but what I will try and do is perhaps just focus on 1 or 2 of those, and maybe I can deal with, I don't know if you like me to deal with that at this point or some point later, but I was planning to talk a little bit about the infrastructure proposals in the physical and the financial infrastructure, because lots of proposals and projects have been announced in this context with large spends, not only in the coming year, but over the next 5 to 6 years as well. As far as tax is concerned, when we go to the tax changes, most of the changes seem to be focused on trying to look at the last pillar of what she mentioned, which is minimum government and maximum governance. So they have made attempts in some of the corporate laws, of course, including what they're talking of decriminalization of the LLP law now that the Companies Act has been dealt with, but focusing specifically on the income tax piece of it. Several of the changes, or many of the changes, or perhaps even most of the changes, are in the context of trying to minimize compliance. Even in the Companies Act, what is proposed is to have small companies comply with less and less. And they changed the definition to substantially look at a higher turnover and higher profit and so on. So I think with that, if you like, Jaideep, I'll stop at this point in time, and happy to go into specifics of particular sectors. It is, of course, a little bit of a, I wouldn't say a cause for concern, but the fact remains that with what has happened, the government has had to spend money to try and restart the economy. So we are ending up with almost a double-digit fiscal deficit for FY 2021, but heading towards 6.8% next year, which is quite good. And it, I think, stems from the fact that even in the economic survey, they have said that, they are disappointed with what ratings have been provided by a Moody's or an S&P, where they have rated India for maybe 13, 14 years now, just one level above investment grade, although there have been substantial changes and growth in the economy in India. So obviously, she's chosen to go down the path of not, wanting to keep fiscal deficit within what was proposed in the FRBM law, and they are going to amend that law. But I think importantly, because the fiscal deficit has been kept at a higher level, the good part, and the very good part, I would say, of the budget is that the positive part of the budget is that no COVID cess has been introduced, no extra capital gains tax has been introduced, no wealth tax has been introduced. People were scared that because of this large looming deficit that the country is going to have, is the government going to take the steps which most experts were saying is the wrong way to go? And I'm glad they seem to have heeded the advice of these experts and not started increasing tax rates or imposing new taxes or cesses. And I'm very happy with that part. I think it's a relief, I would say, in many ways, that none of those negative steps have been taken. The focus seems to be on growth. And they believe that even if this fiscal deficit is 9.5%, in the next year, if they can achieve the growth they plan, they can actually get it down to 6.8%, and over the next 5 years to less than 4.5%, which is a path that they have charted out. So a lot, I think, is going to depend on the ability and the capability of this government to be able to execute on some of the large projects that have been announced. And execution is where I think the test of the pudding is going to ultimately lie. If they're able to do it well, one would actually see a lot of growth come, because investment in infra with a lot of capital expenditure focus is going to allow the creation of demand, is going to allow the creation of jobs, and so on and so forth. So it will set off a virtuous cycle in the economy. Let me stop there and hand it over back to you, Jaideep.
Thank you. Thank you so much for those opening comments. Clearly, one will experience relief that no new taxes were added, but, and we should cover this during the course of this discussion, that was there room to reduce taxation to boost spending, but more of that later. Let me now invite Dr. Sar Deshmukh for his opening comments. Sir, please.
Well, I think what this budget, I think every sector and every segment had a lot of expectations, and they were expecting, rather I think industry as such was expecting that there would be something for revival of demand and all that, and to some extent, I think this budget is going to help that. But I think in a different sense, I would say the best thing the budget has done is that it has created definitely a positive kind of a feeling amongst the market. And I think that's most important, because the majority of the public or the masses, they carried by which way the market is moving. And today, if you have seen, the market is going up and up and up. Probably the feeling will be that the budget is good, because that's why the market has gone up. So the fear that everybody had so far, that the expenditure was not happening, especially the discretionary part of the expenditure, which was not happening, and people were more anxious and worried about what will happen. I think that will disappear, and people will be more free to spend, and that in a way I feel will generate demand and all that. I think secondly, I think in a lot of the announcements and the schemes which have been made, I think encouraging element of all those, I feel, is the participation of private sector. And I think the PPP models and various things have been it has been mentioned. And some of the schemes and all that they have said, especially in the infrastructure development also, you see that the private sector will play some role, be it railways or even, the urban transportation and all that. There appears to be some role for the private sector, and that should, make the private sector happy. There are other things also for, some things which were mentioned earlier also. Those things have been continued. And I think the certain problems which have been created because of the movements in the international market and all that, not to a greater extent, but to some extent, I think they have tried to taken care of. So this, I think, this budget, if you look at it, has been full of ideas and new ideas, and certain, I would say, innovative ideas not tried earlier. And they have, for the first time, those have been mentioned and all that. Of course, some of the ideas which were there earlier, they have come into new format as usual. But I think from that respect, I believe that there is some innovativeness in this budget, and that has definitely created some positive sentiments among all the segments of the the masses, and that's good for the industry. Do you want me to go into details, or should I stop here and I'll come back then again on the?
Yes, sir. We would pick up some of these points in detail as we move along. Specifically, your expertise from an industry, corporate finance, and an MSME sector perspective. So we'll have questions on that front. But you are right. The markets. I think this was the best budget day gain since 1997, and surely a lot to cheer for. But if only the markets were the holy grail of what's going to come forward. With this, let me invite Suhas for his opening comment. Suhas.
Thank you, JD. Thanks a lot, Jairaj. Thanks, Dr. Sardeshmukh. I think, see, if I were to look at this budget, and I think as a very young person or as a child, we've all enthralled by Nani Palkhiwala when he spoke about budgets and analysis of budget. And what he said during that period, during those periods, was very interesting quote there. You know, he said, this is one piece of document in India that comes out every year, which makes everybody unhappy. You know, that's how I think Nani had opened his speech once in Brabourne Stadium, and then he went on to analyze the budget. However, I think India as a country has now moved to say that this is one piece of document which will not make anybody unhappy. You see, today, that's why you will probably find that, you know, the stock markets have moved up. Everybody thought there were going to be COVID cess and COVID tax and that the taxation will increase. That's not happened. You know, however, you see, what one has to look at are two things, and that's what we would look at. What is beyond the budget or which is not there in the budget? I think that's very important. Like you said, there is no COVID tax, which is kind of good. It's not there in the budget. That's why that's good. You know, therefore, what is beyond the budget becomes very important. You talk about various initiatives and policies which would require legislative changes, and those legislative changes would be outside the budget. Therefore, they're going to be beyond the budget. So looking at that is something that we will have to consider. Second, there is a lot hidden in the fine print as always. And therefore we say that we have to read between the lines as to what is there. And it's not from a negative point of view, but it's from a very positive point of view. And that's what Jairaj said. I think there is a lot of push to increase the demand. There's a lot of push to increase the spending, so to speak. And the best kind of who can spend or the highest amount of money is government. And therefore, if you are saying that we're going to provide budgetary allocation for manufacturing sector, within that for automobiles, or we're going to provide budgetary support for infrastructure, which seems to be a large ticket item to be focused around. And I think therefore, from that perspective, we will have to look at what is there, between these lines. There are certain nuggets here which we can say, if implemented correctly, as Dr. Sardeshmukh said, and everything would lie there in the implementation, in the enforcement of what these statements are. So overall, I would say we'll have to really wait and watch, because if you look at the budget of last year, I think largely due to COVID, most of those items which were covered in the budget couldn't be implemented. However, I think some of them are the residuary items like the disinvestments that we're talking about, Air India and others, although at a reduced target. I think those are some of the unfinished items of agenda from last budget that we will have to really look at how that gets implemented. So that's my broad take, JD. Thank you.
Thank you, Suhas. So let's talk a little bit about direct taxes. Jairaj sir, your views on this. You're an expert on the space. Did you think that more could have been done, or this is appropriate? What's your take?
So coming to direct taxes, I think the biggest gain, which I called a relief, is that apparently no new taxes have been introduced in terms of a COVID cess or a defense cess or what have you. And tax rates or surcharges haven't been increased. Having said that, one would always like to see reduction in tax rates, especially if you look at the surcharge increase which happened in the recent past to 25% and 37%, which obviously took the top tax rate to something close to 43% for individuals. But it's very difficult for the government when there is a report that the billionaires have become richer by 35% to reduce those tax rates for UHNIs. And especially in a time when you are trying to make sure that the government garners the revenues, and obviously income tax collections have fallen given the state of the economy. Although on the other hand, GST collections in the last few months, especially last month, have been fantastic, going over the top. So I would say the big relief is that no increase in charges, no new taxes like a wealth tax or anything brought in, no change to the capital gains tax. And mind you, I'm saying all this because we have only just halfway gone through some of the fine print changes in the finance bill. And we will, over tonight and tomorrow, go through all the changes in more detail. So obviously, subject to reading some of the fine print, I can just highlight a few things that have been made, which I think are noteworthy, or at least I'd like to draw attention to as part of the tax changes. Jaideep, I'm not sure. Would you like me to talk for a few minutes and cover some of the changes? Or...
Yes, sir. Please do.
Yeah. Okay. So, there is first of all, the focus, because the finance minister obviously couldn't give away reduced taxes, etc., given the fiscal situation in the country and the pandemic. What they've tried to do is aid in reducing compliance in different areas. So she actually announced as a big gain the reduction in the time limits for reopening of assessments. Now, let me just clarify for everybody's benefit. A tax case could be reopened for up to 4 years. That 4-year period has now been reduced to 3 years. There was nothing like a 10-year period, but there was a 6-year period, which could have been, which she tried to say it as a positive thing. But what they've now done is that if your income which escaped assessment to tax exceeded 1 lakh rupees, you could reopen the case for 6 years. What they've now done is they've increased this limit to 50 lakhs. So they've also started looking at things from a more material perspective and not waste the time of the taxpayer and the revenue department on small fish. So they've said, okay, if it is below 50 lakhs, then up to 3 years is what we will reopen. However, if it is over 50 lakhs, that 6-year period has now been changed to 10 years. So what has happened effectively is that the period of reopening has not been relaxed, but it has gone up from 6 years to 10 years for people whose income tax, which is escaped assessment, is more than 50 lakh rupees. There was another reopening situation which related to foreign assets. So in such a situation, reopening could be done for 16 years. That seems to have been done away with. And now you have a 3-year period and a 10-year period and no specific reference to overseas assets or income. So that is one big change. So it is not that it's all a reduction, but a reduction for the small taxpayer, I would say. There is a big change made in the context of dividends. And this is because lots of people had approached the finance ministry and CBDT for this. But what they have said is that for advanced tax purposes, dividends will be considered only from the installment after they've been paid or declared. Because how do you know which company is going to declare what dividend? How do you pay advance tax on that, and why should you pay interest? So it is in some way similar to the capital gains situation, which has been brought in for dividends as well. A very important and an interesting change is that there used to be TDS on dividends in the context of REITs and InvITs. And they have now removed this TDS because it was becoming a big bottleneck. And I think this is a very important change because it was a hurdle, it was a bottleneck, it was a disincentive, and it has been now done away with and therefore will help to attract more investment into real estate as well as the infra sector for InvITs as well as REITs. And the third change is for FPIs. So FPIs, what was happening earlier was there was TDS, and now they've said we will give you the benefit of the lower tax treaty rate which India may have with that other country, so that you don't have to have tax deducted at a higher rate when actually you'll only get taxed at perhaps half that rate or a lower rate. So they've allowed that benefit even at the TDS stage, which is, I think, important and a good positive change. They have done away with the settlement commission, which I think is an important change. And for the cases which are pending, they will take care of this through an interim board which will be set up. So I'm very happy, and this has happened effective 1st February. It's not even waiting for April, but it is apparently from today. Also, for smaller taxpayers whose income, the disputed income, is up to 10 lakhs and total income or taxable income is up to 50 lakhs, they are allowing an easier way of resolving their disputes. So there is going to be a dispute resolution committee which will be set up, and they've actually put out fair amount of detail into how this will operate and how it will be dealt with. Otherwise, even for small taxpayers, you have to go through the appeal route, commissioner, tribunal, high court, Supreme Court, and it could take years and years. So if this DRC is properly implemented and effective, again, for the smaller taxpayer whose income is up to 50 lakhs and disputed income up to 10 lakhs, it could be a good way to resolution. We are all aware that faceless assessments and faceless appeals had been introduced. They have now taken this and extended it to the ITAT, to the Income Tax Appellate Tribunal as well. Again, it's going to be faceless appeals. And if you want to have a personalized hearing, it will be only by video conferencing. And they will set out the rules in detail. So there's now going to be jurisdiction less in terms of faceless appeals with the ITAT. There are many changes, but I'm just going to try and deal quickly with some of the smaller or changes which may be more relevant. So for affordable housing, some incentives which were there have been extended by 1 year in terms of the 1.5 lakh interest, which was available on loans, extended till March 22. Similarly, the tax holiday, which was there for affordable projects, has been extended. And a new tax exemption has been introduced for notified affordable rental housing projects. In the speech, she referred to migrant workers, etc. So we'll see what this notification is in detail, but they're going to allow a tax exemption for such projects. Similarly, for startups, they have allowed the extension of 1 year in terms of the incentive for investment for the purpose of capital gains exemption, as well as the tax holiday for startups. So they've extended it by 1 more year. For tax audit purposes, they've raised the limit further from 5 crores to 10 crores, which is, I think, a good move. Again, shows the intent of the government to try and focus on bigger things rather than just look at small things. There have been suggestions or proposals rather, which the finance minister has made in terms of disinvestments, divestments, strategic or whatever strategic divestments. And it is proposed that, the condition in regard to carry forward of losses for the disinvested PSU or for the transfer of assets, which will be a neutral demerger and so on. They've brought those in, which is good because it will just ease up the situation when it comes to that. One interesting change in the context of ULIPs, lots of people used to go for ULIPs, but now mutual funds are taxable, as we know from last year or earlier. But for ULIPs under insurance policies, whatever money you got was exempt completely. Now they put a ceiling of 2.5 lakh premium per year. So if it's anything over that, it will be taxed on parity like a mutual fund is taxed. They have taken some stringent steps on certain employers who deduct employees' provident fund, etc. dues, but do not pay them. So effectively, it results in loss of interest for the employee. And then when the employer pays, they used to get a deduction. They've said you will never get this deduction if you pay late. So they've tried to reiterate this point that the intention is to make sure that if you're deducting employees' salary or by way of provident fund, etc., you must deposit it on a timely basis. There is one other very important change they've made in the context of goodwill. And there's been a lot of litigation on this point. In fact, the explanatory memorandum on this runs to 4 pages. So there are various aspects of this. I will just deal with it very briefly at this point. But what it says is that going forward, depreciation will not be allowed on goodwill. Now, there are different situations they have envisaged, because one has a block of assets concept in the income tax law on which you claim depreciation. And earlier, goodwill or commercial rights of similar nature used to go into the block. What they are now effectively saying is you will not get depreciation on goodwill. For slump sale, they've tried to plug in some loopholes, because people used to argue that a slump exchange does not constitute a slump sale, and there were 1 or 2 case laws on this point giving relief. They've plugged that part. There are changes in the context of small trusts, etc. I won't deal with all that. Let me come to equalization levy. I think this is an important change. What they have said is that if the transaction is taxable under the Income Tax Act, then it will not be subjected to equalization levy. So last year there was this confusion, and if you paid equalization levy, you are not subject to income tax. Effectively, they've turned it on its head and said that in the context of royalties or technical service fees, if you have paid tax under the Income Tax Act, then you will not need to pay equalization levy. Now, there are several other changes they have made in the context of equalization levy, which are in the Finance Act itself, not in the income tax law. I'm not dealing with them at this point. Happy to go through it later. But last year, there was a lot of confusion in terms of the TDS and the actual payment of tax. So you could have a situation where there was TDS levied from 1st April 2020 onwards, and you may have paid equalization levy on that royalty. What they have now said is, if there's TDS, you will pay royalty. But you may have a situation where in the last 1 year or almost year, you have paid equalization levy. You will then need to probably adjust it in the next quarterly return, and we'll have to look through the fine print to see what is the process prescribed to be able to tackle some situations so that people are not out of pocket for no rhyme or reason. IFSCs, and Jaideep, I don't know whether you want me to deal with IFSCs at this point or you would like to have a separate discussion. Let me ignore IFSCs for the time being. Several incentives have been provided in the context of IFSCs, which we can come to later. So as I said, several changes in the context of compliance. So one more thing which has been introduced is for purchase of goods over 50 lakhs. If your turnover is more than 10 crores, they've now introduced a 0.1% TDS. And this has been done primarily to make sure that you have an audit trail of people who have spent this money so that they can track it down whether it is properly reported for tax purposes. The advance ruling authority has not been so effective in the past. It started off with a bang when it was first initially started, but hasn't really been that effective. They are proposing to replace the advance ruling authority by a board for advance rulings. I don't know the details exactly of how this will be done, how it will work, but hopefully it will provide much better opportunity for the taxpayer to get certainty, so that you have a board for ruling, advance rulings, which gives you a ruling which you can then act on. So if they do it on a timely basis, do it in a fair and equitable manner, then I think it could be a great opportunity to actually provide certainty, stability to the taxpayer. They've also proposed that in the case of an appeal, you can go to the High Court against an order of this new board which will be set up. There have been certain other provisions that they have amended, that is in the context of transfer pricing. It's more to do again with alignment, etc., which I won't go into this detail now, but MAT provisions in the context of APAs have been suitably amended. There are 1 or 2 other changes I thought I'll just cover. They propose to empower the board to look at defective tax returns and to align the due dates of returns, etc. So this is again meant to ease compliance and pull out some things. For LLPs, there are 2 changes of note. One is, of course, the decriminalization of various offenses under the LLP Act are what is proposed to be now tackled in a full-scale manner. But they have also clarified in the context of the LLP law that the presumptive tax benefit will not be available for professionals who operate in an LLP mode. So like for companies, I think this has also been brought in for LLPs. They're also helping to ease out the pre-filling of the income tax returns as it happens for certain situations like salaries. They're planning to extend it for capital gains from listed companies, interest and dividends. So it will hopefully make filing easier. And they also, one last point I'll make is that they are planning to amend the definition of what it means to be liable to income tax. There's been some dispute, some litigation on this point in the context of what is exempt from income tax, but you have to report it or not report it, and what is liable for income tax and so on. So that definition is proposed to be amended suitably. Let me close with this because I'm sure we don't have so much time and the other panelists must also be given an opportunity to speak. Thank you, Jaydeep.
Certainly. Thank you. Thank you very much. I will come back to you for a couple of points. One is on the financial infrastructure, specifically the new securities code that the finance minister spoke about and IFSC. But let me shift gears a little bit and ask a question to Dr. Sardeshmukh. So what's your take from a MSME perspective that's been labeled as the growth engine for this country, and both from employment and a GDP, this thing? How do you think the MSME sector is benefiting from this budget?
Well, the MSME, if you look at the budget, I think almost a major part of the budget and the budget speech was totally devoted to infrastructure, health, and some taxation provisions, and some of the measures in the legislations and all that for making the for achieving the ease of doing business and all that. Nothing specific has been mentioned for MSMEs and the industry as such, and there are certain things which we can take out of the speech and all that. Those are all, I believe, are indirect kind of a thing. There's only one mention which was made, that there is a provision of some 15,700 crore for micro, small and medium enterprises. And the provision has been more than what it was made last year. But precisely how this 15,700 crore will flow to MSMEs and all that is not known. Probably it may come through the other scheme which was introduced earlier, that is the production link incentive scheme and other things and all that. But I think beyond that, there is no mention. The MSMEs especially had some problem about the cost of raw material, and especially those who are dependent heavily on the iron and the plastic and steel and other things. I think there they have they have mentioned that the duties on the raw material like the iron ore and all that will be reduced. It will have some positive effect in the reduction of the prices, but we'll have to go back and on the calculation board and see to what extent the prices will get reduced and all that. And there are certain other things also which they have mentioned. I already mentioned about the production link incentive scheme, which has been made operational a few months back. And initially they started with some 3 or 4, and then it was extended to 14 segments of the industry, which covers, the auto and auto component and some electronic items and the batteries which are required for these electrical vehicles and all that. But I think there was an opportunity that if you're really thinking that this production link incentive scheme is going to help the industry, why not, incentivize the other segments of the industry and open it up for all the micro, small and medium enterprises and let them be eligible for these kind of incentives and all that. Of course, the quantum will have to be fixed, and that would definitely need a greater outlay of funds and all that. Secondly, I think a majority of the, if you look at the automobile segment and the allied and ancillaries to automobile and all that, probably they could be happy because of the announcement which has been made that the scrapping of old vehicle, the commercial vehicles of more than 20 years and personal vehicles more than 15 years old and all that, they will have to follow the scrapping old vehicle scrapping policy, which is the details are yet to be disclosed and all that. And I think after the budget speech, I heard the Minister for MSME and Road Transport mentioning that the total number of personal vehicles whose life is more than 15 years is something like 34 lakhs. And he arrived at a total figure of 1 crore vehicle, which will have to be required to be replaced if this, the policy comes into force. And if that's really going to happen, I think the demand for, especially for the commercial vehicle segment, will go up substantially. I don't know, in the personal vehicle segment, probably the taxis and all that, probably they will have to follow that. But otherwise, in personal vehicle segment, I think almost everybody has the vehicles with a lesser age and all that. The other demand which was there regarding the GST and all that, that reduction or rather rationalization of GST tariff and all that. And of course, this budget cannot directly do. You'll have to go to GST Council to get certain things done and all that. But I think the encouraging statement which was made that the thought of rationalization of GST, and I presume that applies to even the GST tariff also, is there, and that would be discussed. So let's hope that going further, this will be discussed and there will be some rationalization in the rate structure or the tariff structure of GST will be brought in, which will help the industry to a greater extent and all. There are certain segments of industry, when I'm talking or referring to industry, or even MSME for that matter, a large number of MSMEs are in the service segment. And if you look at the service segment, I think that's not much which has been given to segments like travel and tourism and all that, which generate a lot of employment, and which has practically been closed down. They have not yet regularized or normalized their operations. Slowly they are coming out of it. And this segment has suffered huge losses. So something could have been done probably for the entire MSME segment. As I mentioned, they could have been brought in under the PLI scheme and all that. But these kind of a specific segments like travel, tourism, I don't see much which is being given to them. Then I think there were certain good schemes which have been announced, and yet the details are awaited. We'll have to wait and see. For example, I personally like the idea of formation of a national research foundation with a corpus of something 50,000 crore. And these details have not yet been given, and how it will be operating, and whether it would be only for PSUs and the public sector units, or even the private sector can participate in it. What would be the role of private sector in those that kind of an initiative will have to be seen. As Mr. Jayaraj Purandare mentioned, there have been certain attempts in attaining more and more ease of doing business, especially with the tax audit and other things. The smaller firms and the MSMEs, the compliance part will get reduced. That's what I feel, and even Suhas will talk further about that. But that should help the MSMEs. And in the entire infrastructure segment, it's not only road and the urban transportation and all that, but emphasis has been laid on the improvement in the dock infrastructure. And there, as I mentioned earlier, they said that the management of docks, the private sector will be involved, and that would be handed over to some private sector companies. Though the direct benefit of this to the industry would not be to that extent, but I think the transaction cost, I believe, should come down, because if you see the import export happening at the docks and the traffic of goods and all that, and the delays associated with it, with the trucks standing outside the dock areas and all that, and if you calculate all that, there is a substantial overhead cost which get added to that. And we all know that, be it MSME or large companies and all that, the many components are imported. And if this transportation and the dock and incidental cost gets reduced, that should help the industry and all that. So we'll have to see the various schemes which have been mentioned to see what precisely there is for for the MSMEs and all that. Of course, the MSME was expecting some kind of a direct incentivization and some direct funding support to them, which is not there. And even with the credit availability, though it is there and now, but the MSME entrepreneurs know that the credit is not coming that easily, and still there is some amount of hesitancy in extending the credit. And going forward, if we see, because of the infrastructure impetus and the spending, general spending going up and the demand catching up and going this thing, I think again the credit requirement of these MSMEs will go up, and we will need certain specific initiatives to help these MSMEs. And again, I haven't seen any reference which has been made, or I have not gathered the statistics on the dues to MSMEs, a large portion of which again is from the PSU units. So the latest position needs to be seen. But that easing of the credit policy of these organizations and the easier payment to MSMEs and all that is definitely expected. But let's see if there is some thing or some scheme which is being worked out and which will help the MSMEs for their revival and further growth.
Correct. Thank you, Dr. Sardeshmukh. I think MSMEs could have received a lot more benefit. But Suhas, I know we'll talk about compliances and ease of doing business at some point. But before we get in there, I wanted your views on the power sector, specifically the thrust on renewable energy and the power distribution sector. There was a lot of talk about that. What's your take on it, Suhas? You're on mute, Suhas.
Yeah, thank you. Thanks a lot, JD. And Jairaj, thank you for your articulation. I heard you first time way back in 2000, speaking on the budget, and I think you got the same punch, and it's kind of more sharper now. Thanks for joining us on this panel today. Thank you very much.
I was saying getting older. You know what happens with wine as it ages.
Yeah, but I mean, before moving to the power sector, JD, I just wanted a brief kind of a view on the health sector. You see, today the problem that we have faced this year has been COVID, and I think one of the critical kind of areas to focus if we have to get into the growth space is to bring the confidence back into people so that they are able to contribute to GDP, work without any hesitation. And as Dr. Sardeshmukh said, I think today, if you look at the services sector, and the services sector seem to be the most adversely affected sector at this point in time. Because come what may, I think the manufacturing sector, at least insofar as essentials are concerned, we are continuing to manufacture. In terms of non-essentials, they're slowly coming back and treading along. But services sector has struggled a lot. And if you want to bring back that confidence into services sector, I think one thought process was 80% of India needs to be vaccinated. And when we talk about 80% of India to be vaccinated, I think merely 35,000 crores have been provided in this budget as a budgetary allocation. And of course, the government has made a statement that whatever is required, whatever will be required beyond this would be made available as a budgetary allocation. But I think that is one area where most of the allocation seems to be going towards setting up healthcare infrastructure and healthcare schemes. Now, when we look at that, and this is supposed to be beyond national health mission, so to speak, and there is one statement that I think is in the budget. It says that we're making this allocation of 64,180 crores to cater to detection and care of new and emerging diseases. It scares me, Jedi. It scares me. Are we resilient enough? Do we have enough contingent fund? Also, I think in terms of the contingencies, the government seems to be kind of increasing the amount of money that's there. I think I leave it for another round and another discussion whether this is, it could be whether this is sufficient enough. Is there enough focus on this? But this could have been a confidence building measure if it was dealt with in further details to give confidence to 80% of Indians that you will be vaccinated by December 21. So let's speak, or thing like that. But having said that, coming back to power sector, I think on one hand, we're talking about hydrogen generation plants. On the other hand, I think we've also talked about green power to an extent, reduction of custom duty on some of the components on the non-conventional energy, so to speak, the wind or the solar turbines. However, the biggest statement that has been made is a further allocation on DISCOMs. And I think DISCOMs have been struggling. DISCOMs have been struggling, and everybody knows this is not the first budget in which there is a budgetary support that is being provided to DISCOMs. If we were to look at the earlier budgets, and that's where I think very interesting figure emerges, there was a provisioning made for 22,000 crores. Again, it was based on result-oriented power reforms. Now that budgetary allocation in the power sector for DISCOM seems to be 3,05,000 crores. Now, having said that, there are two new elements that have been brought up, or two new elements that have been talked about. I wouldn't say they're completely new. We'll have to look at again the details and read between the lines as to what is going to happen there. One is, of course, they're saying we need competition at the end of the consumer. So we need more than 2 distribution companies when I think the final last mile connectivity happens with the consumer, so that you have a choice. You have a choice of alternatives there. This was tried to be brought in by virtue of amendment to the Electricity Act some time back to distinguish between content and carriage. And therefore they said when your kind of carriage is your transport, your distribution and transmission, your content would be the 2 licenses operating at the same end. Now, whether that experiment will continue, whether it will be in that form of content and carriage division in the power sector, it's something that we'll have to look at it. But I think giving that choice, if this is the solution that's being thought about, then I think it probably is a non-starter as a choice at the consumer level. I think we're way too far away from providing choice at the consumer level by having 2 distribution companies competing with each other. You could probably do in select areas in the country, but I doubt whether it will be possible all across the country. We all know that DISCOMs are monopolies and that their financial conditions are indulgent. Absolutely, I think there are no new generating capacities being built which are in the GENCO for DISCOMs to have it automatically. So I think GENCOs to an extent are again government entities controlled individually. So I think overall, if you look at it, power infrastructure, which is being talked about as one of the drivers of economy, I think there are a couple of concerns here. On the renewable, green and non-conventional energy, I think there are statements, and we'll have to look at how those statements get translated into action points at the ground level. That's broadly my reading on the power sector, JD.
So Jaideep, if I may just add one
Thank you,
little
Suhas.
small point
Yes.
to what Suhas said. He's dealt with the power sector in some detail. I just wanted to clarify for everybody's benefit that the 3,05,000 crores that has been announced for discoms is not in this year. It's over 5 years. So it is, if you take an average, it's only 60,000 crores per
Over
year.
5 years.
It's over a 5-year period and not in the coming fiscal. So 2-3 places in the budget, she's announced big numbers, but she's then clarified or stated that is over 5 years, 6 years, etc. So even in the healthcare sector, for example, she's made a point, but it's over, 64,000 for, healthcare, but over a 6-year period and so on. Yeah, please.
Yeah, just adding there, again,
Yes.
I'll go back to Nani Palkhiwala's quote again, because he said on the budget, he said every budget has a legal effect for only 1 year, but its economic consequences are for enduring for years together.
Yeah.
And I think that's played a 1 year to 5 year provisioning being made, and then actually you're looking at a very longer period consequences of that appear. Sorry, JD, please go ahead.
No, thank you so much. I know Jairaj sir mentioned that he has to drop off at some point. Sorry, are you trying to make a point?
I was just wondering if you would like to just pick up. There are lots of announcements made in the financial infrastructure sector. And if you permit me, for a couple of minutes, I'd like to just focus on that, because I think there's some very significant announcements that have been made. And I won't go into all the details, but for many years, it has been realized, and for those of us who've done a lot of work in the power infra sector, we know that, with the financial institutions, FIs as they were earlier, having been done away with, it was not easy for getting long-term funding for many of these projects. And banks typically should not be lending long-term, because you have then the whole issue of mismatch of demand and supply of loans and borrowings. So they have now thought of reintroducing and setting up a DFI, which is, I think, a good move. It's been in the pipeline, according to me, for a few years, but thankfully they have now brought it in, and she's now talked of putting 20,000 crores for the DFI, and a bill will be introduced for this. I think one very significant change is in the context of the Insurance Act, where they are now allowing a foreign insurer to invest up to 74%. Not just 49% has been there for a long time now. But importantly, they're also saying that not only that, but we will allow you control and management subject to certain safeguards. And she outlined 3 safeguards as part of her speech. But the point is, it shows that the country seems to be getting more confident of itself. And I will come to this point later. But this is a key change, I think, because it shows that India is now not scared. It's not frightened. Some foreign insurer will come and take over all the business of LIC or whatever. The other point I think I want to make is on the disinvestments or monetization of public infrastructure, etc. So they've said that various, Air India, BPCL, etc., which have been in the pipeline, will get done. I think for COVID or whatever reasons, they've been slow in this. And this is going to be an important element in balancing the budget to come up with that 9.5% fiscal deficit. They need to aggressively be able to get money from the divestment of various things. She specifically talked of the IPO of LIC, which is, I think, a big thing. But there is one very important signal that has been sent. The government is now willing to disinvest in public sector banks and one general insurance company as well. So this is a very important signal, because for the first time they're saying that we will allow lower holding of the government in public sector banks. We don't know as yet all the details. We will soon. But it's an important signal, because if this works well, it could very well get extended to the rest of the public sector banks as well, which could change the complete landscape of the banking sector in India, I think. So I think this is a very big change. And another related thing is for the NPAs in the context of banks, which we know has been going around for the last couple of years, lots of talk of a bad bank, etc. And they are now talking of proposing to set up an ARC to handle this and then to be able to sell off those assets to AIFs, etc., as they can monetize them. So I think these were 3-4 key changes in the financial infra space. There are many announcements, but I thought I'll just touch on a few of them because these were very significant changes.
Right. And in fact, one of the points I wanted to bring forth was the securities market code. The thought about bringing together several regulators together. What's your take on that? And I'd like to invite comments of Suhas as well.
I think a very good move. I should have covered that as well in my comments. But they are now proposing to make SEBI, amend the SEBI Act, the SICRA, etc., and have consolidate all these and have SEBI as the regulator, for all of these type of situations. And I think that's a good move. I hope they're able to implement it effectively. Similarly, they've also, getting SEBI as the regulator for the gold exchanges and so on. So I think that these are all moves in the right direction. And you want to consolidate. You don't want too many regulators, too many players in such an area, which needs to be logically consolidated into one space. So I think a good move. But I'm sure Dr. Sarvesh Mukh or Suhas may have their own thoughts.
I think before Mr. Purandare leaves, I would like to have some comments of both Mr. Purandare and Suhas on the concept of these faceless tribunals and what they think about it. Is it really going to work, faceless tribunals, and how will it work, and is it really going to help the industry?
Suhas, you, I'm sure, have some comments to make on tribunals with what has happened with Supreme Court rulings in the past, etc. And then, of course, we can talk of ITAT specifically.
Yeah, I think my personal view is that sometime or other, these kind of reforms will have to be pushed across. In a sense, if you make it mandatory, see today what has happened, and this is by and large justice delivery system in India, is that on every issue, we conduct as though there is a final hearing where counsels read papers after papers to the court, take courts huge time or tribunals huge time, and refuse to accept that there could be documentary adjudication of issues. So, making these tribunals, e-courts and online tribunals, unless it is forced, it will not happen. If, for example, it so happens that today the entire justice delivery system, like the PACER in the US, agrees with, by consent, merely a documentary hearing there, or you don't need a personal hearing, although you may have rights under principles of natural justice, etc. But if you give consent saying that let there be documentary adjudication and will abide by whatever would be the orders, I think the pendency will get reduced tremendously, and this will actually facilitate expeditious disposal. Having said that, one other angle, which is there is one statement in the about tribunals or reorganizing and restructuring the tribunals in India. I think in 2017 finance bill, this was introduced, Finance Act was passed based on that, and the rules were framed. Those rules were struck down in 2019 by the Supreme Court. Government actually amended that again in 2020, and again in 2020 that was struck down. On two difference in time. So there seems to be some element of this push and pull happening between legislatures and Supreme Court. It has happened twice. I just simply hope that this time around, when the tribunals are being talked of, the constitutional veracity of it would be completely verified even before putting it up before the legislature. Otherwise, there will be complete waste of time going back and
well, Suhas, as they say, third time lucky. 2 times they've had a problem. So hopefully this time they'll get it right. and make changes which are appropriate and not unconstitutional in the view of the Supreme Court. Dr. Sardeshmukh, coming to your specific question in the context of ITAT and faceless assessment, I think this is the way to go. Honestly speaking, I think we must use technology to its utmost, must use it effectively. Any change is always going to create some teething problems. It will create resistance. Humans like to resist change. So there will be some resistance. There's no doubt there have been challenges to all this faceless assessment and appeals thing in certain parts of the country. But I would welcome it. I would think that this is the right direction to go. We are heading in the right direction. It is not only effective use of technology, but also will cut down, I think, on the time for litigation. Even for professionals, instead of having to just go and wait there, you could actually argue from your chamber when your matter comes up. You can continue to do your other work till then, and you're not wasting intellectual capital. It's such an economic waste. I think that's one of the biggest economic wastes in the country, when lawyers or chartered accountants have to go and just wait for their turn to come. I think this is a great opportunity. Also, I think it's a big thing in the context of assessments or appeals, that this will also help to, I think, cut out on possible corruption modes. So I think all in all, I would fully support this, because it really helps in getting it going, cutting down the period of litigation, and making India much more attractive, whether for domestic or foreigners to invest, much more attractive destination. So I support the technology thing wholeheartedly. I think, having said that, just on a lighter vein, I believe, when you want to still get an adjournment, people say, oh, my connectivity is bad and I'm not able to dial it. So that excuse can't happen every time. So I'm sure the courts will not give too much leeway for such situations.
There is one other thing I want to add, Jairaj, is that during this pandemic, whenever we've had these online hearings from the court on urgent matters, we have realized that actual talent comes out. See, a lawyer, let's say from a district court, who was otherwise very shy of going to Delhi and arguing the matter, now wouldn't mind logging online and arguing the matter. And actually, we are seeing some gem of counsels emerging during this pandemic. You see, that's on the other side of the profession, but that's one advantage that we have seen.
Yeah, that's a good side effect.
That's a very good side effect.
No, thank you for raising that question, Dr. Sardeshmukh. In fact, to that point, I wanted to circle back with you and ask you, you spoke about MSMEs and the budget for them, but what's the general feedback or the general aspiration of the industry? Specifically, if you could focus on manufacturing and infra, that will be great.
I think infrastructure, the industry as such, I believe that they are, apparently they are happy, and they say that it's a good budget and it will generate demand and all that, because the lot of expenditure in the basic infrastructure development, will help to allied industries to get into the business and generate that. And, the MSMEs, again, I would say I mentioned that they said there will be some reduction in the certain raw materials and all that. But on the other hand, if you look at it, they said that the custom duties and all other things will be rationalized. But it appears that there has been some increase in the custom duty for certain things like refrigerators and the mobile phones and all that. Today, I think mobile phone is I think the largest selling commodity in the country, and people are going for their purchases and all that. And if that gets affected, and we are expecting a lot of investment from outside to come into that segment. So we'll have to see, and we will have to study what that impact could be and all that. And I think Well, as I said that we yet have to see the effect of this, the productivity link incentives and all that, how they are getting benefited, and how that incentive flow will be from the government side, because the experience is that all these incentives and all that, though they have been announced and all that, the actual dispersal or the payment to the industry gets delayed, and it loses its importance for the industry in this. We'll have to definitely read the fine print to know exactly how the MSMEs and the industry is going to get benefited. But overall, I believe that there is a positive sentiment, and people are expecting that the demand will go up. And in fact, I heard many of the larger OEMs saying that they are coming back to normalcy, and by the December quarter, they have already reached to their original capacity utilization level. That's a good sign. And if that happens, the MSME also will get benefited.
Right. True that. Thank you. I think Jairaj sir, you want to add a point?
So with your permission, I was going to ask if I could leave. I didn't realize it's past 7. It's actually past 7:15. And if I can just make one last comment maybe, and then leave with the permission.
If I may request, in your closing comment, could you cover IFSC as well, and then we can let you go.
Okay. So let me then touch on IFSCs. Yes, we didn't cover that. It's clear that they want to promote the IFSC, which has been set up in GIFT City. There is a clear push for it. And what they have now done is extend a few more benefits for IFSCs. So there have been 2 or 3 key things that they have done. One is that they have provided a tax holiday for capital gains to promote IFSC. The income of the aircraft leasing company, that has been exempted. Tax exemption for the aircraft lease rentals received by the foreign lessor has been also provided to be tax exempt. And what they have said is, because this was a big issue for the foreign fund managers, they are finding it very difficult to meet some of the conditions which are set up if they are not to be taxed in India. So lots of the foreign fund managers have not even thought of moving to India. So what they have said is that we will relax these conditions if you want to set up in GIFT City in IFSC. So that is one big change. All these are done to attract this thing. And they've also made one more change, which is the investment divisions of the foreign banks. They're setting up there. They have said that we will allow exemption for that as well. So I think these were just in brief some of the IFSC changes. If I were to, in closing, and I'll just wrap this up in a minute. If I were to, every sector wants attention when the budget is announced. But I just thought that one sector which didn't get a mention at all, and which we as Indians, I think, perhaps should be a bit concerned with, and I haven't seen what is the outlay for this, but the defense sector did not get any mention. And with what's happening on our borders, I actually thought they may even introduce a defense cess, but I didn't see any mention of higher outlays for this sector. I know in the business world, we are less concerned with it, perhaps largely unless you're into defense manufacturing. But it is a concern to me as an Indian that we need to probably get a lot of focus there. I know there has been road infrastructure projects in Assam, West Bengal, etc., where they've put in a lot of money, which is again bordering on the borders, which is good. So that was one concern I had. The second concern was really to do with the fact that so many of these schemes with very large outlays have been announced. And I'm just a little worried that the government has the capability and the capacity to effectively execute and implement a lot of these schemes. Otherwise, these are just announcements unless they are properly executed and implemented. So that is one area I think which will need a lot of focus. But I think in closing, what I'd like to say is that it just seems from the budget speech that the country seems to be more self-confident. And I alluded to this earlier. Maybe it's from the cricketing win. Maybe we are taking it on even in the government, that we are becoming more confident of ourselves. But despite what a Moody's or S&P may give you as a rating, the government has gone ahead with a 9.5% fiscal deficit. Mind you, when you add the states, this becomes quite a large number. And there has been a statement that the center in the next 5 years will bring it down to less than 4.5, and states, they will incentivize to bring it under 3 and so on. So that's a good plan set out, but that's a plan. So we seem to be confident of, having a higher fiscal deficit, but getting on with it, maybe because it's an unusual year, unprecedented year. And even this is represented in other things like the insurance sector I mentioned, that, we are now happy to give 74% if somebody wants to invest, including control and management, but with safeguards. So on that note, let me thank all of you. Thank you, Suhas. Thank you, Jaideep, Dr. Sardeshmukh, and all the audience. I'm sorry I need to take leave, but thank you very much for a very interesting session and good to hear everybody's thoughts. Thank you.
Thank you so much. There have been some questions that came through. We'll pass them along to you for responses.
Surely, surely. Thank you. And apologies for having to leave. Thank you.
Not at all. Thank you. So let's move to the subject of ease of doing business and compliances. The finance minister spoke about MCA 21 version 3.0, and I took the liberty of analyzing the vision document of the Ministry of Corporate Affairs, vision set out from 2019 to 2024. And while MCA 3.0 is MCA 21 3.0 is a welcome initiative and in the direction of ease of doing business and so on, but one of the things, if you scrutinize the document very closely, is that a lot of it is still being planned and discussed, and you will see the full power of that come through in this financial year, that is 21-22. And one of the things that they have mentioned is that they are going to effectively use AI and data analytics with its full capabilities to identify and auto-detect non-compliance by companies and the directors. That's auto-detection. And second, they want a predictive tool which will assist in taking action against the defaulters. Now, these are two significant points that is buried in the detail. This will this drive up the mindset towards compliances, or will this be seen as that the burden is going to go up because there is going to be an increased scrutiny? Your take on it, Suhas, and then I'll request Dr. Sardeshmukh also to comment, please. Suhas.
Yeah, thank you, JD. I think on this, MCA 2021 version 3.0, I think admittedly it's still work in progress insofar as government is concerned. About 10 days ago, government announced that there will be a consolidated portal which will actually talk about transparent compliances through portal being driven with a lot of cross-functional integration happening there. Having said that, we tried to log into the portal was not working. We've had same challenges when MCA was first introduced, and MCA 1.0 was introduced, then MCA 2.0. But I think insofar as at least the MCA portal is concerned, we are now reconciled to the fact that yes, there is a transparency and there is an ease of compliances. Now, whether the agenda such as use of AI in terms of predictiveness, use of machine learning, use of data analytics at this point in time, through e-security, e-adjudication, and kind of e-management of compliances through compliance management system, CMS, as is broadly referred to, even in the budget speech. I think it's a good point of reference today at version 3.0, moved from 1 to 2, now 3. Talking about ML, AI, data analytics, as in it is important to look at this roadmap from the point of view of a project which will eventually lead up to a far better transparency and simplicity of compliances. I think the entire, as they say, the kind of God is in details. Similarly, the entire focus or entire success of this project would depend on how it would get implemented. Dr. Sardeshmukh, your views.
I entirely agree with you. It has yet to get the shape. And I think once we know more about that, we will come to know to what extent the ease of doing business will further be achieved and all that. If you look the current, World Economic Forum ranking and all that, still a lot needs to be done. And I think from that angle, the government is trying to do that. If you look at, again, coming back to not from the point of view of large companies, OEMs and all that, for smaller companies, mid-size and small-size companies, I think the major compliance complaint has been in the area of GST. And that's what they have said, that they will look into rationalization. And that's the need of the hour. So we'll have to see how effectively and how fast they will bring this rationalization. And if they can achieve that and they can make the system much more faster and easier, I think that will bring a lot of ease of doing business. The experience, I'm sure, of the chartered accountants and those even you people, these portals and all that, and if there are certain returns and these things are to be filed and all that, these government portals and systems are pretty slow, and many times there are some problems and all that. I think that also needs to be eliminated and removed. So what's precisely happening in that area also we'll have to see, and whether we can do something about that, that is also important and all that. And I think in the area of compliance and ease of doing business, a lot depends on the lower rungs of administration. These the lower level government officials and all that. And first of all, I believe that they are not aware of so many things and all that, and then they start certain things, and that creates problem for the industry. So as we are talking about faceless tribunals and all that, I think we need to go to the bottom of the compliance machinery, and whether what we can do for a faceless kind of a transaction, and how these things can be, the inspections and other things could be eliminated. And if you are able to do that, I think we will achieve a greater ease of doing business.
Thank you. Thank you. I think we've got some questions in the audience, but before we go there, I wanted to bring in your comments about the boost to the IFSC, or GIFT City as we know it. Dr. Sardeshmukh.
Yeah, this project is there for quite some time, and every budget, I think something is being given to it. We really need that kind of center and all that. Now it's being developed at Ahmedabad, so we don't have much choice about the place and all that. But whether this center can have a better connectivity and can spread its network all over the country and all that, that we'll have to see. This is required because as the international trade business and we are expecting a lot of foreign investment now with opening of the insurance and all that, and with certain other segments and all that, we do need this kind of a facility. So I think that's a good move, but again, a lot depends on its implementation and how ultimately whatever objectives have been set for, they are achieved. We'll have to see once this entire thing, the proposal is put into force.
Okay, got it. Thank you. So, ask your views before we move to the Q&A segment.
So I think, you see, if you look at IFSC and the manner in which IFSC is kind of taking shape now, again, I will say it's a work in progress. As Dr. Sarveshmukh said, okay, successive budgets have dealt with providing something or other to IFSC and bringing it to the shape. However, I think we today have an enactment which is an independent enactment today, and there is a super regulator in IFSC for that region and for that area. Now, that super regulator has powers under the Act which are kind of overriding powers under IFSC Act today given to that regulator. So actually, if you look at it, delegating issues to the regulator and allowing the regulator to deal with the development of that region is kind of achieved today by enabling enactment. However, from the point of view of Indians wanting to move in there and the foreigners coming in there, what are the tax incentives being dealt under the Finance Act? Therefore, the budget treatment to IFSC is limited and ought to be limited. However, how do you facilitate and enable based on only these incentives that are provided in this budget or prior budget is not going to be enough to set up a world-class financial services sector there. It is far more required to be done. It is an area where I think world needs to look at it and say, wow, it's not about us saying wow in IFSC today. And I think for creating that benchmark, I think much more is required to be done than what has been provided or what has been enabled currently in the finance bill. That's my take on IFSC.
Thank you very much, Suhas. So I think we have a lot of questions. Some of them may have been answered, but we have a question from Andre Charn. What do you feel is the key takeaway and the difference for the startup sector? Dr. Sarveshmukh, would you like to take that?
JD,
First want to say something.
Yeah, there's only one point which I want to mention here.
Yeah.
There is a reference in the budget for mandatory conciliation when it comes to contractual dispute between a contractor and the government. You see, one needs to look at, again, I think conciliation currently under the Arbitration and Conciliation Act is discretionary in nature. There are certain contracts, and almost every government contract where there is arbitration provides for conciliation, which is mandatory in its nature before moving on to arbitration. So what is this new aspect which is coming up, where the conciliation will get a far better footing than what is currently there under the contracts as well as Arbitration Act? If in true sense this gets implemented correctly and we have success stories on conciliation, I think it would go a very, very long way. Now read this together with the Consumer Protection Act, mediation being mandatory before the consumer forums. I think it is a very interesting era that we are entering into, where we are saying if there is a problem with justice delivery system in the courts, I think there are these alternative mechanisms that one can look forward to resolving. And in true sense, if we were to kind of give meaning to the words and therefore put our might in implementing it, that if this conciliation is one single element that works to the satisfaction of a global community from an investment perspective, I think this will boost a lot of confidence across the investment community. Because look at what has happened in the Keynes space. Look at what has happened in the various bilateral investment related arbitrations for India is concerned. I think at a global level, we have in recent past taken a beating insofar as this boosting of confidence of investors is concerned. So although it's just about 3-line, 1-para statement there, but if this is implemented correctly, and that again and again, I think Dr. Sarveshmukh mentioned this, and I'm mentioning this again and again, everything lies there in the implementation. If this happens, I think it will boost the investors' confidence in true sense. They will say, forget about everything else. If there is a conciliation which is fair, reasonable, and expeditious in India, our investment certainty would be achieved. That's one area I just wanted to mention. JD, I'm sorry, I kind of butted into the question.
No, Suhas, that's a very important point. Thank you. So I was actually trying to address a question raised by Andre Charan. So his question was about what is the key takeaway and what is new for the startup sector in this budget? And I was inviting Dr. Sardeshmukh for his comments.
Well, sorry, again for the startups segment, whatever we have learned from the finance minister's speech and the information so far being made available and all that, that the existing concessions and tax postponement, tax deferrals and other things have been further continued for the capital gains and for another 1 year and all that. But there is no specific scheme which has been dealt with at least in the speech and all that. And I believe that when we are talking about the Atmanirbharta and other things, we have talked a lot about Atmanirbharta from the perspective of the infrastructure and other things. But what about the capacity and capability building of especially the smaller companies, the SMEs and startups and all that? What about the technology transfer, which is very critical and very important for Atmanirbharta? Because unless we have that technology, the world-class technology, we cannot look inward and we can't think of Atmanirbharta and all that. What is the provision for that in the budget? I don't know. We'll have to see the fine print to find out that. And for the startup also, my experience is that the startup has been unfortunately in fintech or in IT and other kind of segments and all that. But I believe that we need real startups in the manufacturing segment, and the manufacturing startup need definitely certain packages which are far different and far distinct from the segments like IT or fintech and all that. And those are the startups which require some kind of assistance for a longer duration and all that. And we really need to look into it and how we can further help them. And this, if we really have some kind of a startups in this area where like manufacturing and all that, where we are trying to enhance our contribution, the manufacturing contribution to GDP, and we are trying to match with the manufacturing capabilities of the entire other world and other developing countries also. I think we need a more specific startup policy, more specific benefits, and even an infrastructure for startup.
Right. Thank you. Suhas, would you like to add to that?
No, I think Dr. Sardeshmukh covered it pretty well. I think the two elements broadly in the budget. I think the tax holiday extended to March 22, and the capital gains exemption also for 1 more year, March 22. The only question that I had is, if you're talking about capital gains, I think how many during this period, how many investors would invest in startup and expect to gain in matter of 1 year or 2 years or 3 years of their investment is a huge question mark there. But I think these are the only two incentives that we have seen currently in the budget. Compare that with the Jump Our Businesses Act in the US, which is kind of going through a very, very interesting phase. I think startups could have deserved much more.
Certainly. Thank you. So the next question is from Amay Patwardhan. And the question is, Niti Aayog in the past had emphasized the usefulness of boosting direct selling industry, especially in the economic slowdown scenario, which creates a lot of self-earning opportunities. Has this budget done anything for this space? I mean, of course, we have experts, and I'll request them to respond to this. but our preliminary analysis based on the speech and the document does not indicate a focus on this. Of course, the actual document is quite thick and we are yet to kind of digest that. But Suhas, Dr. Sardeshmukh, did you all find anything about this space in your analysis?
No, JD, not really. I mean, also, I'm not too sure whether what is a direct selling industry here, because if you look at e-commerce, I think the equalization levy has gone, and therefore, to an extent, e-commerce's stress on equalization, which was there through across the borders and global play, that seems to have been reduced. But at least I haven't seen anything in this space in the budget. Doctor?
And I think where these kind of opportunities exist, that is the services segment, and I mentioned few of them like the travel, tourism, and all that. Practically, there is nothing for that segment in that. So I think that point has not been taken care of in the budget.
Right. Thank you. I think the next question is from Colonel Chandok. So he's thanks to the panel for intriguing comments and analysis. Colonel, thank you for joining us. His question is, has the budget mentioned any direct or indirect benefits for companies who were importing earlier, but now have decided to manufacture in India?
Is broken off. Hello.
Sorry, I had a little bit of a network outage there. So, Dr. Sardeshmukh, the question was from Colonel Chandok asking about if there be benefits for companies who were importing earlier, but now are manufacturing in India under the perspective of Atmanirbhar Bharat. Did the budget do anything for these type of companies?
For the import substitution, you mean, or?
Yeah, I mean, manufacturing in India versus importing. I mean, the same product, but now you make it here locally rather than imported.
At least I'm not aware. I have not come across any such scheme in this budget.
Right. Looks like we have Suhas back. Suhas, the question was that is there something in the budget for companies who are now manufacturing the product in India versus importing it?
No, I don't think it's in that relativity that there is something in the budget. But from Atmanirbhar perspective, I think there are direct, indirect incentives provided. Both, I think, direct as well as indirect incentives. And I think from the custom duty perspective, there's a bit there. But again, you will have to look at which product and what classification.
Got it. Thank you. We have a question from Shekhar Bhatt. Shekhar, thank you for joining. The question is, are there any incentives for the solar energy sector or the electric vehicle manufacturing in this budget? I think, Shekhar, we touched upon the renewable energy earlier during the webinar, but let me raise this question to Suhas. Are you seeing anything in the EV space? And then Dr. Sardeshmukh, your comments as well.
See, now, Shekhar, this is again, we'll have to read between the lines. If you read between the lines in terms of automobile industry, the kind of this voluntary retirement of vehicles, voluntary stroke, compulsory retirement of vehicles, bringing them off-road, I think it's obvious that the only alternative then would be available is to look at electric vehicles. The automobile industry as such has been given, and there is a budgetary allocation, which is unprecedented budgetary allocation for the automobile industry. I think the government had come out with an agenda on electric vehicles, and it would continue to push that. I mean, if you read automobile industry budgetary allocation there, look at the kind of statements made on clean air and green energy. I think you will find that there will be something in the offing, and we'll get a better clarity as we move forward. That's my reading. Dr. Saab?
No, I agree with you entirely, Suhas, that the earlier the automobile policy, and especially the policy related to electric vehicle, is already in force, and there are certain concessions which have been given. Of course, the industry was looking for some further reduction in duties and taxes and incentives, rather incentivize the purchase of electrical vehicles and all that, which has not been mentioned in the budget. That's missing in the budget.
Right. Thank you. I think that covers the Q&A. If there is anything more, we'll request the audience to kind of send us the questions via email. But let's get quick closing comments from you, Dr. Sardeshmukh, and then Suhas.
Well, as I said, this budget has got is full of new ideas and certain new things, and it has definitely created a positive, feeling amongst the general masses as well as the industry and all that. There are some ways by which the demand can be further accelerated. And I think that by the end of third quarter, almost the Indian industry is feeling confident that they are back to normalcy and they will proceed further with growth and all that. So on that backdrop, this budget has come. So overall, I feel that there is a lot of positivity in the economy, and that should, along with the certain provisions which are there, that will help. But I think those provisions and the certain things which I already mentioned and all that, they will take some time to get implemented and to see the effect of that on the overall industry, and demand and other things and all that. So we'll have to wait and watch what happens. And we live in a quite a dynamic kind of an atmosphere in economy. So I think we have to be very cautious, and we have to move further with the positivity which has been generated now.
Thank you. So, ask your closing comments, please.
No, I think, as I said at the beginning, I think it ensures that people are not unhappy. It's in the positive direction and the way. Okay, there is one other element that could be a game changer, like the conciliation that I spoke about, is the asset monetization and monetization of infrastructure, or national monetization pipeline that has been created, which translated into loose term, whatever are the government's assets which are today not being monetized could be monetized. Now, let's take the land, for example. The amount of land that is available with railways or with defense department, and I don't know whether these kind of assets are there in the monetization pipeline. This land bank which is available, if it is monetized and put to a better and a commercial purpose, I think it would give tremendous boost to the economy, because that's one area which could become a complete game changer if you were to put it from the point of view of asset monetization. Now you need to again look at the form and the manner in which this would get implemented. That's an interesting area to look at in future. Having said that, I think from the overall perspective, you see, much could have been done, but I'm sure there are compulsions at this point in time. We're talking about a recovery of economy in a V-shaped, and when the budget speech started, it started off with GABA victory of India. You see, I think at the end of the budget, we forgot about what that was. Thank you.
Thank you so much. With this, I'd like to thank the audience for joining us. A big thank you to our panelists for joining in. Dr. Sardeshmukh, I know you had a very busy day. Suhas, likewise, and Jairaj sir as well. A big thank you for joining us and sharing this. Clearly, there is a lot more to speak about. We will have a follow-up session on this Friday, talking about specific impact on the area of risk and compliances. Details would be sent out later. I'd also like to take the opportunity of to thank the research team that helped put the date together for us, starting with Jyoti, Sulabh, Risha, Mehak, Sujay, Manisha, Snehata, Shikha, Bhumi, Udit, Ahana, Shashank, and Vidyul. Thank you so much. I know we've been up since early in the morning trying to do the pre-research and all of this. So a big thank you to all of you. If I've missed anyone, please pardon me. And thanks to Diana and Mehak for putting together the webinar. Dr. Sardeshmukh, Suhas, thank you again for joining us. Have a nice evening.
Thank you. Thank you very much. Enjoyed.
See you.